Hey everybody, this is Alex Merced from alexmerced.com. I want to do this video on sort of understanding the Bitcoin, blockchain, crypto world. Now, if you haven't seen my video series kind of explaining this in a much more long form way over there at bitcoinblockchaincrypto.com, or subscribe to my podcast, the Bitcoin, Blockchain, Crypto Podcast, you should do so. What we're seeing in the world right now is that a lot of people are learning about Bitcoin for the first time and seeing that a lot of other people are making money with Bitcoin as Bitcoin's price continues to go up. And you have a lot of people buying it who don't really understand what Bitcoin is and what cryptocurrencies really are. They just know that the asset's going up. So there is a level of high speculation going on that's driving some of the more volatile prices. But the fact that there is sort of speculative buying, and speculative buying purely sort of somewhat mania based, it doesn't necessarily mean that there's no value to the asset. So again, there's just two things here. Speculative buyers, which speculation is not a bad thing, okay? Speculation in all financial markets helps drive price discovery, also helps provide liquidity to market participants. So in the sense that if we're talking about futures contracts, if I'm a farmer who wants to go short grain futures to lock in my profits, I can do so because there's an active market for futures contracts. In the same way, there's an active market for cryptocurrencies that allows cryptocurrency miners to fund their operations and allows them to have the liquidity to run their operations in order to back that network, etc. So there's a value in having speculators out there. I think the bigger fear is that these speculators aren't necessarily big financial institutions entirely. A lot of them are grandma, everyday people who maybe don't understand this enough and are taking more risk than sometimes they realize they're taking. Which, again, nothing wrong with putting your money in crypto, but like anything else, you should be well informed and do your research so that way you know what you're doing. Okay, so with that out of the way, what I want to do is just kind of talk about the crypto world. Okay, so basically you have blockchain. Blockchain idea is it's a decentralized ledger, so it's keeping track of transactions. The benefit of it is that you don't have to have any one person keeping track of this ledger, which means that there's no head to cut off. So for example, if someone went to hack your bank's records, you could lose all your money. If you had one person who kept track of, so for example, let's say you participated in sort of illegal sports betting and someone killed your bookie, well, now there's no one who knows what bets you have because it was all in that one instance of the ledger. With the blockchain, you have a ledger that's kind of distributed across several computers with unrelated people who don't know each other, and they can't manipulate that ledger because it requires all of them to run their computers and sort of consent to changes in the ledger. So that allows there to be sort of a record of transactions, and at the same time it's a record of a transaction that has a lot of integrity and it's decentralized. And that's where sort of the currency kind of comes into play. So there has to be an incentive for people to want to maintain this ledger. So when you set your computer up to be a miner, which means you are curating this ledger of transactions, you are rewarded with currency, in this case Bitcoin. Cool, right? So basically, you've created this model for decentralization where basically, and you can apply this model to anything. You can say, hey, if you do X, if a bunch of people just randomly decide to help out and do X, they get rewarded in, digital token, okay? And that digital token can generate value. So you can, the Bitcoin applied it to the idea of keeping track of a ledger, but you could apply this to anything, and that's what other sort of cryptos are trying to do, trying to sit there and apply this sort of model to different problems, whether it's providing unused hard drive space, providing identity verification, knowledge base, trying to see if we can distribute and provide things in a decentralized way by using sort of this blockchain, be rewarded with cryptocurrency type model. That's pretty exciting. Okay, so the application technology is pretty cool. Now, regarding Bitcoin specifically, Bitcoin's in competition to sort of be the next sort of big decentralized payment system, or the decentralized payment system, which is pretty exciting. Now, of course, people will point out that there's issues with scalability, the environment, as far as the amount of electricity that's used, with all these people who are setting up their computers to mine Bitcoin. But that's where you have the market of all these other alternative coins who are trying out different hashing algorithms, different ways of processing transactions to see what's the best way to scale. Now, the Bitcoin community is very large, and as you've seen, there's been Bitcoin forks, so Bitcoin Cash, Bitcoin Gold. Why these forks happen is because there's a disagreement within the Bitcoin community about what's sort of the next step as far as how to evolve Bitcoin. Because the bottom line with any of these cryptos, because of its decentralized nature, for changes to happen, everyone kind of has to be on the same page. So when a small group of people want to go in a different direction, the ledger splits, you have a fork. So in this case, there was a split between going the route of larger blocks. So imagine like larger pages on the ledger versus in a more settlement transaction saying, okay, how about we take a look at all the transactions, all the buys and sells, and instead only commit the end result to the ledger. So these two directions kind of split. The bigger blocks, the bigger pages of the ledger went Bitcoin Cash, and then the settlement direction kind of went Bitcoin proper. More people sort of agreed with that. Okay? But who knows, maybe later down the road, that turned out to be the right choice. So Bitcoin Cash will sort of grow in value and whatnot. And there's other features that are being tested off other coins that maybe small groups on the Bitcoin community will break off and say, hey, let's try that feature out on the Bitcoin blockchain and fork. So I do think that at the end of the day, the payment system that will end up being sort of the winner, sort of the most dominant one, will either be Bitcoin or a fork of Bitcoin. Because as really killer features get discovered on these other altcoins, there'll be people who will adapt that code into either Bitcoin proper or into a Bitcoin fork of some sort. So I think that's one of the biggest values of Bitcoin, because most future forks will probably be off Bitcoin. Maybe Ethereum and Litecoin on occasion. So in that case, by holding Bitcoin, even if you don't spend it now, you're occasionally getting a fork of some other coin that has some new feature that might end up being sort of the winner in the end. Does that mean all these coins, once we figure out sort of which is the most dominant, the one that figures out scalability, the one that figures out the environmental issues, that figures out all the different questions and problems, that means everything else becomes worthless? I don't think so. There will be room for niche coins and niche communities for niche uses. But there'll probably only be one coin that gets worth a ridiculous sum of money because it solves all the problems. But it's the speculation of that creates the resources, the financing for people to do this experimentation, to discover and develop this technology. So again, there's a grander economic use for the speculation that's going on. It's not just a bunch of crazy people. Okay, I'm sure there's maybe one or two. But that's not the only competition. So when we go to Ethereum is different in the sense that it's a blockchain of blockchains. So it's competing against many others who've taken that idea and created different versions of it. Whether it's NXT, whether it's Waves, whether it's BitShares, whether it's ARDR, et cetera, et cetera, et cetera. All these other blockchains of blockchains. Because the blockchain of blockchains, which I know sounds weird to say, they offer a very unique service where people can create those niche coins to be used for a gift card, to be used for an initial coin offering, to represent shares in a company or represent an interest in an enterprise, to be used as sort of in video game currency. These are uses where it doesn't necessarily need you to make a whole new blockchain that has to get separate miners. So having a platform where you have miners mining one blockchain that allows other chains or side chains to branch off of it, like an Ethereum, like a Next, like a Waves, like all these platform coins, Stratus, Neo, there's a very huge use case for that, because there's going to be a lot of need for all these sort of niche tokens and a platform to create a niche token without having to create a whole new mining base every time. So to me, that's the other big competition. So there's the competition between the coins, the ones that are looking to be sort of that payment system. Okay, so that's like the Bitcoins versus the Litecoins, and then Bitcoin versus Bitcoin Cash, Bitcoin Gold. These are just things that are meant to be used for payments versus the competition among the platforms, the blockchains, the Ethereums, the Waves, the Neos. And then on top of it, those are not necessarily going to be the most private solutions in the world, because the demands in that, and sort of for everyday transactions, does need a level of transparency. The demand for platforms probably is going to demand a level of transparency, but there's also going to be a demand for a huge level of privacy in other types of commerce. So there's also going to be the competition between Monero, Eon, all these privacy-based coins. Okay, so that's another competition. And then you have sort of everything else, all the niche coins, the ICOs, etc., that are probably never going to be $1,000 a coin. They're really niche things, but doesn't mean they necessarily don't have, they have value depending on what they're being used for, if those enterprises sort of pan out. And that gets a little bit more complicated. But the idea is that you have this sort of rich things that are trying to be figured out in the crypto world, and there's a lot of alternatives trying to figure out these problems. And people think, well, one coin's going to win and then the rest are going to fail. I think that's a bad way of thinking about it, because at the end of the day, like anything else, there can be niches. There probably will be one dominant payment system, and it's going to be, right now, that's at least the way it's going to look like doesn't exist yet, because you have all these different blockchains with different features trying different things. And over time, some blockchains are going to start adapting the stuff that works, and one of these blockchains is going to adapt quicker, and that's going to be the winner. I do think it's going to be Bitcoin, or a fork of Bitcoin, for the reasons I stated before. It just seems logical that what's going to happen is, as the other blockchains discover killer features, that people will just then adapt them into forks of Bitcoin. Because then what happens when you fork Bitcoin, everybody already now has a vested interest in the new blockchain, because you automatically, if you had Bitcoin before the fork, you now have this new fork as well. So it's an easy way to get everybody involved with new features that may work. So I imagine that's what will happen. Although other coins may be so good that people fork them. So there have been forks of Litecoin, of Ethereum out there, and forks of other blockchains. Considering the dominance of Bitcoin, the amount of people who own Bitcoin versus other currencies, it just, to me, makes sense that it'll be either those features being adapted into Bitcoin or into a fork of Bitcoin that'll sort of be the end winner, in a sense. That's all I really wanted to talk about, just to kind of explain to you that what's sort of going on from a competitive sense. What is this market trying to figure out? What problem is it solving? And how to think about it. Because a lot of people are like, okay, this sounds like cool technology, but I don't really know what it's used for. It has several applications. If you don't know about what's happened in Cyprus, what's happened in Venezuela, those are interesting uses. If you tried to think of this Bitcoin payment system in the terms of, well, will Americans use it? You're thinking about it the wrong way. You got to think about the countries that don't have as much financial infrastructure as right now, and their ability to leap forward because of things like Bitcoin, their ability, like with Venezuela, with everything falling down because of their oppressive regime, they've been able to maintain an economy because of cryptocurrency, because you have this financial infrastructure that can exist independent of government. So when you have an oppressive or a dysfunctional government, you can still maintain an economy. And that's very valuable. But again, in a context where you have more political stability, like in the US and most developed nations, that may not necessarily be where that use case is. But it doesn't necessarily mean people in those nations cannot speculate and provide liquidity for those other use cases to exist. Yeah, so you guys have a great day and enjoy. Just wanted to say all that because I know a lot of people have been asking a lot of these questions, and this is kind of like the stuff I've been saying over and over again about this stuff, so I figured put it in a video. See ya.